Hey, everybody. I'm going to go through some smart contracts with you today. If I start yelling like a maniac in the middle of this, excuse me. I'm getting ready to watch Paddy the Baddy on UFC coming on, who's a pretty fun guy to watch fight. He's got that beautiful hair, the Pete Rose Mo haircut, and charming young fellow. So, what is a smart contract? Okay, smart contract is a lot like a digital contract that's up on the blockchain that will automatically execute legal information. So let me kind of break that down. It's computer code that's pushed up to the blockchain. And for those that aren't following crypto or don't really have a full understanding of it, look at the blockchain like an Excel spreadsheet up on a distributed network. So pieces of that Excel spreadsheet are spread out through everybody who's a node. So it can be on in technically pretty much an infinite number of computers or devices. Most blockchains don't have infinite number. Most of them are in the hundreds to thousands of nodes. So this public ledger, as they call it, will allow you to put in. So same with Excel. Excel allows you to code in there as well. So you actually write codes and formulas in there. In this case, it'll be formulas to automatically distribute. So, for example, tokens, coins, everything else. Now, that's a general overview, but think about it in terms of maybe a real estate transaction or banking or something like that along those lines. So this is a big deal for what's called DeFi, and you're seeing a lot of companies right now start to freak out a little bit about this. Banks, etc. Because what is a bank? A bank is a community of people who put their money into savings accounts and liquidate that bank, and the bank will then turn around and lend that money out based on the parameters of your credit, your LTV, your DTI, your employment, etc. So those are just standardized rules, and there are automated underwriting engines to make those decisions. There's DU, DO, LP, which are your Fannie Freddie engines, and then there's a number of other engines that have been created for everything from commercial products to anything along those lines to determine, is this person eligible? Are they likely to pay back? The higher the risk you are, meaning like the lower the credit score, the worse the history, the higher the rate, the worse the terms. The better the score you are, the better the terms. Maybe they lend you more money at a lower rate. So that's the game. So how does that apply to smart contracts and DeFi? So in the DeFi world, instead of having a bank or a community bank, you could have a community of crypto people. And essentially the way that works, same way the bank would work, everyone puts up their money, only the smart contract regulates the actual parameters for the lending. So all those automatic lending parameters that we just discussed are built into the actual smart contract up on the blockchain, and there's no human involvement. You either do get approved right away and you get your money, or you don't. So you're seeing a lot of this right now being right now. This is happening. You're seeing a lot of it happening with people putting and staking their tokens for loans. So right now, if you have, let's say, $100,000 in Bitcoin, you could actually lock that Bitcoin up with a public ledger, smart contract, get $50,000 cash, or sometimes maybe even more right away. And then you have a certain amount of time to pay that back. So in some cases, let's say it's a year, you have to pay back that $100,000 at 8%. The community is actually getting paid the 8%. Yeah, I'm just throwing out numbers, by the way. They're getting paid out in Bitcoin or in interest based on the fact that you're paying it. So there is no middleman. There is no bank. So the advantage to the community is incredible. Instead of making bankers rich, we become the bankers. And the same thing can happen with insurance, auto loans, real estate transactions. I mean, anything you can imagine can actually be put up on the blockchain as a smart contract. And when the parameters of that payment have taken place in full, it can even release things like the title of your home or car, the note of something, the actual digital or the actual physical asset that's paid off can be physically represented by the release of title or ownership of that item automatically without human intervention. Now, what happens if somebody doesn't pay? Well, then they don't get their Bitcoin back, which is why they usually cap it at, let's say 50% LTV. So you put in 100 grand to get 50 back. Because if you don't pay, the smart contract doesn't want the community to end up taking a big hit. So they protect the community by keeping the loan to value low. The Bitcoin would then be liquidated and people would actually be compensated, or the person's loan that they took out would be paid. And then depending on the smart contract, the person actually gets a refund for what's left over, or they don't. So there's different ways to structure that. The cool thing about it too is you can actually set up money in perpetuity. So within the smart contract with an NFT is, we talked about this yesterday, could be a digital representation of, of a JPEG that's layered or stacked, an individual trading card, etc. It can also be a physical asset. You can actually sell a home as an NFT, and that's already happened all over the country, including here in Florida, cars, etc., where it's an image, but it's an image that represents the physical asset and the title and ownership. When you're building in your smart contract for a physical asset, you could actually put in a recurring payment back to the owner. So you could say, okay, I have this house, I'm selling this house. I want 2.5% every time this house is sold from here on out, and build that into the term. So then that house, for perpetuity, you almost act as the realtor on that house, whether you're the realtor or not, because you've built in that residual into the smart contract itself. So the repercussions of this are pretty amazing. A lot of people look at crypto and say, oh, it's Bitcoin. It's a lot more than that. We're talking about technology that can change the world, can literally change banking and push all the power of the banking world to the community itself. For a lot of people that have been excluded from the banking world, or all the bankers that have gotten wealthy, now you, me, and our group of people and friends can become the banks and actually take the money that the banks would otherwise make and distribute it just by participating in the community project itself. There's secondary market repercussions. There's all sorts of other more complicated things. But when you think about replacing insurance companies, replacing banks, and the standard, obviously you'll have a need for a physical bank, to some degree. But when you think about the repercussions of all the different industries that can be replaced just by automating through the smart contract world on the blockchain worldwide with no fraud, it's pretty staggering. So pretty cool. We'll continue to update you on all sorts of stuff like this, so that you're in the know, and make crypto easy for you to understand, and make it a lot more than just, hey, this is Bitcoin and Ethereum, but this is technology that's going to change the world. And HapPhi, which is who we are, we're at the forefront of this. We're going to be creating some cool things to help regular people take advantage of the blockchain without having to be experts and having to, set up all sorts of protocols and make it way more complicated than it has to be. So easy on-ramp into an exciting world of incredible technology with big, big changes coming for businesses and individuals. That's our goal. That's what we're doing. Hope everyone has a great Saturday. We'll do this again. Let's do it every day. Have a great day, everybody. Bye-bye.